Well, I think 2024 is going to ultimately be a good year for stocks because we've got a Fed that's no longer fighting an inflation war. And we know that the ISM manufacturing, these PMIs are bottoming, and that's correlated with earnings beginning to accelerate. And we know there's pent-up CapEx. Capital spending's been sort of held back for the past few years. So that accelerates. That's good for earnings. And we expect mortgage rates to fall, which would be good for consumers. So it's really going to be a good year for stocks. But the caveat being the first 6 months probably a little more challenging because in the first 6 months, investors are going to be a little itchy or anxious for the Fed to do their first cut. And that uncertainty is going to weigh on stocks. And at the same time, it's going to bring back those who are fearful inflation rears up. So I think it's a good year overall, but most of the gains come in the second half.
Really, this is a simple case of consolidating some of the outsized gains we saw at the end of last year.
Yes, and as we all know, whenever you have a parabolic move, and the move from October to December was basically parabolic, you need to consolidate. In fact, you might even have to decline a bit. So I wouldn't be surprised if we have the market down, as much as 5% by March. But that's really going to end up being a pullback you want to buy because, we're not having a hard landing. The only risk to our view would be if we have a recession.
What is the risk of recession in your view?
I think it's low. In a typical year, the odds of a recession is 20%. I think it's probably around 20%, maybe even less, because I think what investors have priced in is greater than a 20% recession. As you know, there's still many people skeptical, thinking the only way that a Fed cycle ends is with a recession. So many think you're going to have a recession this year because of the yield curve. I think those have been very costly for investors because people have been overly cautious. But yeah, so I think the recession odds are low.
What is your earnings picture for gains in 2024? Is it 10% on the S&P?
Yeah, it's pricing power and sort of greedflation. Only really a handful of companies really did that. Many of those were consumer product companies and staples, and they're the ones that have been suffering recently. Unit demand, I think, is one of the stories that'll emerge because as soon as we have lower interest rates, demand for housing is going to improve. There's a huge multiplier effect to GDP from housing activity. So I think you're going to see the cyclical part of the economy really pick up. To me, the number of cuts isn't going to be as important as how the bond market reacts to the trend in inflation this year. And, we think inflation's still on a glide path much lower than consensus. So I do think we're going to approach target before year end, before the year end 2024. Maybe, this December one could be a little bumpier than expected. But if that's in fact the path, like inflation's weaker, I think interest rates, especially on the long term, are going to fall more than expected. And so it's going to be less about how many cuts the Fed does, and it's going to be whether or not the Fed also recognizes that. So to me, stocks are going to take their cue from the bond market more than what the Fed actually does.
So you don't think the last mile is going to be an issue because of wage gains or whatever? You think the Fed will get to 2%. People said we're never getting to 2% again. You don't think it's a new normal?
Probably the best clue to this is the fact that we just got consumer inflation expectations from the New York Fed survey earlier this week, and inflation expectations are back to pre-pandemic. So if consumers aren't expecting inflation to reaccelerate, and housing and cars, which has essentially been 86% of the change in inflation, if those are normalizing, and housing doesn't have to be negative, it just has to grow at 3%. And as you know, used cars could fall, like as much as 30% in the next 12 months. You don't really have much behind inflation. So I'd be surprised.
So it was transitory. That's
yeah.
That's what you're saying. It was transitory all along. It was, yes. It wasn't, it was, it is, it wasn't. It. So now we decided we're back to that. Okay, so just to end on, give me your 1 year and 5 year price target for Bitcoin.
I think in the next 12 months, something over 100,000, maybe 150,000. And, in the next 5 years, again, it's you know, there's a finite supply, and now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, you know, something around 500,000 would be potentially achievable.